Today's webinar topic is strengthening your financial capability throughout the retirement journey. My name is Muriel Howden. I am the Executive Assistant and Senior Outreach Advisor for RTO ERO. I will be moderating today's session and providing active offer for any participants who wish to ask questions or have information relayed in French. Throughout the webinar, feel free to use the Q&A feature to submit your questions for the panelists. Je suis Muriel Howden, adjointe de direction et conseillère en liaison à RTO ERO. Je serai la modératrice de notre session d'aujourd'hui, dont le sujet est « Renforcer votre capacité financière tout au long de la retraite ». Je vous invite à poser vos questions ou à partager vos commentaires en français dans la boîte de conversation questions et réponses afin de les soumettre à nos invités. Before we begin the webinar today, we would like to pay our respects to the Indigenous lands that connect us across Canada. I am speaking to you today from the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat peoples, which is now home to many diverse First Nations, Inuit, and Métis peoples. We acknowledge, recognize, and honor the ancestral traditional territories on which we live and work, and the contributions of all Indigenous peoples to our communities and our nation. Je m'adresse à vous aujourd'hui du territoire traditionnel de nombreuses nations, incluant les peuples Mississauga de Crédit, Anishinaabe, Chippewa, Haudenosaunee et Wendat, qui abritent aujourd'hui de nombreux membres des peuples des Premières Nations, Inuit et Métis. Nous reconnaissons et honorons les territoires traditionnels ancestraux sur lesquels nous vivons et travaillons, ainsi que la contribution de tous les peuples autochtones, à nos communautés et à notre nation. I would like now to introduce RTO ERO Board Chair, Martha Foster, who will introduce today's speakers. Martha?
Thank you, Muriel. And I'm delighted to have you all here with us today. It is my delight to introduce to you our two presenters, who are Kevin Maynard and Suzie Graham. Kevin Maynard is the Vice President and the COO of the Canadian Foundation for Economic Education. He is the primary project facilitator for Managing Your Money in Canada, a series of financial literacy workshops developed for seniors, newcomers, and recent immigrants to Canada. Suzie Graham is a certified financial planner and a retirement income specialist with IG Wealth Management. She helps her clients grow and protect their wealth and leave a legacy for their loved ones. Multi-generational planning is a focus of Suzie's practice. And so now I'd like to turn the floor over to Kevin.
Thank you, Martha, and I am delighted to be here with you all this afternoon. I'm going to just share my screen with you, and we can get started. I work with the Canadian Foundation for Economic Education and have had a long experience with people just like you. My grandfather was a truant officer. My sister was a head of resource at an elementary school, and my brother was a custodian. So I share a lot with members of RTO ERO, and I'm delighted that Suzie, my colleague, is joining us. This workshop is being brought to you with the support of IG Wealth Management, who works with our foundation as we deliver programs and services to stakeholders across this country. Our agenda today, what I have worked with RTO ERO and the folks that are part of this presentation are to talk about financial literacy for you as a member of the organization. And when we talk about financial literacy, it's more than just the acquisition of knowledge. Our foundation takes a look at taking that knowledge and using it effectively to make good decisions as we go through the various life events that we're faced with, and experiencing those events, using that knowledge as effectively as we can, whether we be a young person in elementary school, a teenager who's going through high school, someone transitioning from school to the world of work, or a senior citizen or a newcomer that's just arrived in this country. So it's about taking knowledge and using it effectively to make decisions with confidence and competence around the life events that we face. In the workshop that I planned for today, it's about thinking about our legacy. What is it that we want to do with our life, particularly in those so-called golden years? Your friends at RTO ERO are going to share some additional resources that we've built into the presentation. There will be an opportunity for Q&A, and then once you close out of the workshop, of course, we will be asking for your feedback as you reflect back on today's experience. I'd like to start off with goals and a discussion about goals. So why are goals important in our lives? Goals are those wishes and dreams that we all have, the things that we want to accomplish in our life. And generally, when we think about goals, those goals are associated with wherever we're at in our life, in the journey that we're going on. I think the real thing that we can use effectively as we think about our future is to think about goals in terms of windows or windows of opportunity. So when I think about a goal, I want to think about a goal that might be happening this year, something I want to do, something that I want to be, or something that I want to have this year. So that's usually the first thing that we think about in terms of goals, is we use a short time frame. Now, the challenge that we have as we continue to age and as we experience new things in life is taking those goals and the experiences that we have, our wants and needs, and positioning those goals for the future. So it's a little bit more difficult to think about a goal 3 years from now. So 3 years from now, how might the things that you want to do, the person that you want to be, or those things that you want to have change 3 years from now as compared to those goals that you have this year? So if I was to ask you, what might be a goal that you have about an activity 3 years from now, that's a little bit more difficult than if we were to think about it for a goal or activity that you might be doing at the end of August in 2022. And as we continue to age and experience life and the challenges that it gives us cognitively, physically, emotionally, and spiritually, it even becomes more difficult to project outwards to 5 years or 10 years from now. But that thought about those goals, those wishes and dreams, those aspirations that we have are really important, because those goals help to drive the plans that we have over time. And when we think about goals, we have to think back in terms of priorities, making some decisions about those priorities that might be relative to one goal or another. We have to think in terms of the time that will be required to achieve our goal, the money that will be part of that attainment of a goal, and the priorities that we'll be assigning, the choices that we'll have to make between competing goals in our lives. Now, usually when we think about goals, we have to think about how are we going to actually fund or pay for the goals that we have in life. So let's first think about income. So generally, in terms of income, for an older adult like me, I just turned 60. So I have to think about what are the sources of income that I will have relative to my life. So there are a number of sources of income. Canada's public pension system that we'll talk about in just a few moments. Provincial benefits programs that might have income components or might have grants or other sources of funds that might reduce expenses. You may have an employer pension plan from the school board or district that you're in. You might have your own personal retirement savings that you've generated and investments that you had over your working life. And some of you might still be working in part-time, temporary, or contract work. So that's the sources of income that we have that might relate to the goals, the plans, the wishes and dreams that we have in the future. I want to speak particularly to two elements of Canada's public pension system. And it's likely that most of you are well versed in the components that might be part of your income stream. But I'm going to speak specifically about CPP and a little bit about OAS. So generally, CPP is a monthly benefit that you will receive that's based on your contributions over time, over your working life to the Canada Pension Plan scheme. And generally, what happens is at your 65th birthday, you'll start to take money out of that plan through that benefit that you've been building over time. Now, the specifics about your particular circumstance, you can get specifics from Service Canada, and you can find out details online or by contacting Service Canada by phone or via the internet. They're probably one of the best government departments that I've experienced because you can get detailed information about the benefits related to both CPP and OAS related to your own personal circumstance. I wanted to draw your attention to two parts. Actually, it's three parts of CPP. But let's talk about things that you might not be aware of. My husband died at the age of 42, and when he died, I became eligible for something called a survivor's pension, based on the fact that my husband contributed to the plan during his working life. So when he passed away, I became eligible for a survivor's pension that was based on his age at death and the contributions that he made during his working life to the plan. I wasn't aware that even at that young age that I would receive a survivor's benefit. So I wanted to raise that benefit for your attention for all of the people attending today, because the survivor's benefit is something that I wasn't counting on. And currently I receive over $600 a month based on the contribution of my spouse to the plan prior to his death and the age at which he died. So the survivor's benefit is an important component part that many people aren't aware of. The second piece that I wanted to bring to your attention was the death benefit. So the death benefit is close to $2,500. The maximum is $2,500. So if you contributed to CPP over time, your estate would receive a benefit called a death benefit that is dependent upon your working life. The maximum is about $2,500. But that is a significant contribution to your funeral expenses, your memorial expenses. Those things are related to your afterlife ceremony that you might want to consider. It's certainly not going to be enough to pay for an average funeral in this country, which can range anywhere from about $800 up to close to $12,000 to $13,000, depending on the type of ceremony or remembrance service that you want. But those are the two things that I thought were important to raise with you. The other key thing is that, in fact, you can withdraw from the CPP program as early as the age of 60, or you can wait until 70, and that will affect that minimum amount or the average amount that you would receive. If you retired at the age of 65, on average, a Canadian would receive about $1,200 a month. If you retire earlier and want to withdraw from CPP, that amount would be withdrawn based on, or lowered based on the year that your age was when you initially collect the benefit. So it could be as low as $770, about a 36% reduction. Or if you waited to the age of 70, that would be a 42% increase over that amount that you would receive at the age of 65. So you would get about $1,700 if you waited to until you were 70. So that decision about when you might take your CPP benefit is a personal decision. But again, I do highly recommend that you contact Service Canada to see what the effect of early withdrawal or later withdrawal will have on your income over time. Remember, CPP is just one source of income that are going to be related to your income over time as you, in fact, retire. Now, in addition to the Canada Pension Plan, you may also be eligible for some employer pension plans, depending on the school, board, or district that you were involved in. And those could be part of a defined pension plan, a defined contribution pension plan, or a group RRSP, depending on the situation in your own local jurisdiction. So again, you might have additional funds that will add to those funds that you receive from CPP or OAS. OAS, Old Age Supplement, is just an additional amount above and beyond that CPP amount that you will receive over time. Again, for the CPP or OAS, I do highly recommend you contact Service Canada directly. For your employer pension plans, your local school district or board will provide you with information related to those income amounts. You may also have your own registered investments, those savings or investments that you've made over time, which would include individual registered retirement savings plans or RSPs. Perhaps you have a TFSA, or you might be at the age where you actually have a RIF, registered retirement income fund. So those are other sources of income that you could look to. Now, some people still have part-time work, temporary work, or contract work that they do over time. And here I just wanted to mention one thing, that working and experiencing an opportunity to share your knowledge or your hands-on experience with your community and others in your profession is a good thing. That helps for your emotional and social well-being over time, but you must be aware of the financial implications of continuing to work in retirement. For example, you must remember that if you're working for pay, that work will be taxable income. So that's the first thing. So it might raise your tax bracket, particularly if you're receiving benefit from CPP or an employer-sponsored retirement plan. So remember that when you're working and earning a pay for that work, that will impact your taxable income for that given year. The other key thing to remember as well is that there are certain levels of income that will affect your ability to receive other government benefits. And if you exceed that threshold for income, you may have a clawback on those benefits that you may have been eligible for. So keep in mind, if you're going to be working, emotional and social well-being, experiencing that ability to share your knowledge, to share your practical skills with your community is good. But if you don't need the income, consider volunteering as an option, and that way the financial implications will be less, and you'll still be able to be involved in your community. The other source of income or less expense in terms of the windows that I mentioned earlier, 1 year from now, 3 years from now, 5 years, or 10 years from now, is the opportunity to access provincial benefits programs. And those benefit programs will vary by province and territory. There's a really great website that I found. It's called the Benefits Finder website. It's included in the resources, and there is a hyperlink on the slides that will be distributed after today's presentation, where you can actually link to that particular website. I love the website. It's a Government of Canada website. You fill in some information about your particular circumstance, the province that you're in, some details about yourself. You just fill in that information. There's a lot of questions it will ask you. It will ask you about your marital status, whether you own your own home. The more information that you provide the website, the better the opportunity is to see the range of benefits and programs that you might be eligible for. Once you load in all of that information, and there's about 3 screens that you add in that information for, you hit continue, and what will happen is the system will spit out categories of benefits that might be useful for you as a user based on the information that you provided. So you can see here, when I did it, there were 9 categories of programs and services available from Canada's federal government, from provincial governments or territorial governments based on where I live, and other organizations that might be useful for me. Again, it's based on the information that you put into the website. I really liked it. So for example, when I loaded in, I live in Ontario, and it came up with a series of resources in one category called health. So I looked at those health categories and I read the really brief little introduction about each of those programs and services that might be available for me because I live in the province of Ontario. If I was interested in a particular program, then I could click on that link, find out more about that particular program, and in most cases, actually complete an application online. It's a really great website. The other great thing about it is it also has access to other not-for-profit and NGO-related resources around benefits and programs that are useful for me. This particular website, when I clicked on the benefits finder and I looked at one of them that dealt with accessibility programs, the March of Dimes of Canada actually has some programs that help with accessibility issues. So again, if I wanted to find out more, I could read through that actual link and then apply online. Similarly, again, because I live in the province of Ontario and I'm concerned about my health, I could actually find information about coverage for prescription drugs related to my condition. So again, an excellent resource for me to either increase my income or lower my expenses over time. Now, there are many other resources that can help us in terms of identifying our income. There is a Canadian Retirement Income Calculator provided online by the Government of Canada. Again, I put it in the resource list that I'll be sharing with you, and it helps you to understand the CPP, OAS, GIS benefits that you might be eligible for depending on your particular location. Again, it's a Government of Canada website available both in English and French, and you simply load in your information, and what it does is it tracks or projects out your income over those windows that I mentioned earlier. So 1 year from now, 3 years from now, 5 years from now, or 10 years from now, based on the information that you provide into the system. Now, it's very similar, in fact, to if you called Service Canada and gave them details about your situation, they would be able to provide you over the phone with some estimates about your CPP, OAS, or GIS eligibility. This site actually allows you to see that information in a graphic form. So one of the things that I encourage you to do is to take some time now to take a look at your income. So, and you don't have to do it as an exercise right now, but it would be really important for you to identify what your sources of income are now. Do you have earnings from work that you're currently doing? Do you have investment returns that you're getting? What about Canada Pension Plan, OAS, or GIS? Are there other government benefits where you're receiving income? What about your savings? Are you using your savings to help in your cash flow currently? Again, great online services that could help you, including your bank. The idea here is to be very sure about what your income is now. Now, if you know what your income is now, the other thing that I want to encourage you to do is think outwards, project using a crystal ball, if you will, what your income might be in the future. And there are some tools to help you, which I've mentioned in this workshop. But I want you to think about what your income is going to be maybe 3 years from now, or 5 years from now, or 10 years from now. Because again, when we think about our goals or objectives, our wishes and dreams in life, we need to project out into the future. If we want to follow a pathway, a journey that will get us to the end of our life, then we need to do some planning around that. And it's not mystical. We can actually begin to put a plan in place, a roadmap that we can follow moving forward. The other piece of this is around spending habits. So we talked about income. Certainly, we must talk about expenses. So if I was to ask you about your spending habits now, would you be able to identify what your current expenses are? Now, most people, when they complete their income tax returns every year, they think about not only income, but you do think about expenses. And you have tools to help you with that. Perhaps you have an app related to your financial institution in your banking. Perhaps like me, you keep a spreadsheet of household expenses. The idea here is not only to be aware of what your current expenses are, but to think forward 3 years from now, 5 years from now, and 10 years from now, so that you can plan appropriately, not only for what your income is, but what your expenses is over time. And recognize the fact that you're going to change. Your physical body is going to change. And therefore, you may have other expenses that you currently don't plan for. For example, maybe you might need to build a ramp if you live in a bungalow, but you have steps to go into your house. Maybe you're going to have to move from a 3-story home into a condominium apartment. Maybe you might want to think about retirement living and living in an assisted living environment. So again, those costs are related to changes in your life, both physically, mentally, spiritually, and emotionally. And you need to be able to plan out in those windows that I had mentioned, 3 years from now, 5 years from now, and 10 years from now. And you need to reflect back on your family condition, for example. And if health issues or cognitive issues are part of your family experience, your medical history, you may need to think about that and think about the possibility of those same conditions applying to you over time. We always talk about planning effectively and budgeting. So a budget is that plan that looks at our income and our expense and the savings that we have available to reach our goals. So our goals are our wishes and dreams. We need to plan effectively for the funds, the financial wherewithal to be able to achieve our goals. I really do recommend that you use a budget, a calculator, or a spreadsheet, a worksheet to do it. You monitor your income and your spending over time. And as you go through life's transitions, you reevaluate your budget and your available resources that you have at the time. If your budget situation changes, remember, look at it 1 year, 3 year, and 5 year windows, you need to plan effectively over time. Now, there has been some research done that looks at the challenges that seniors and other older adults face here in Canada. And a national strategy has been developed that looks at the key issues faced by older adults. So the first one is planning for retirement effectively. The second is starting another career that allows you to exercise your brain and your hands effectively, or to enable you to earn the income that is required to achieve the goals and objectives you have in later in life. The third major challenge faced by most seniors is that converting savings into ongoing income, and that mind switch that is required. Instead of saving money, now you have to start withdrawing money to use over your retirement years. The fourth one is dealing with attempted fraud or financial abuse. Many seniors are faced with those challenges. The fifth is traveling, particularly as our life changes and we may lose our spouse or significant other. How does that actually impact on our ability to travel? Or perhaps our physical or cognitive abilities impact where we can go and how easily we can travel. Some of the other significant items that were identified in the research done by the Canadian government and the national strategy that resulted from that was moving as our housing needs changed and dealing with those housing and accommodation transitions as we're faced with them. The sixth was coping with illness or disability, either for ourselves, our loved one, our spouse or significant other, or other family members. Relatedly, caring for a loved one and the demands that places on ourselves and on the care that we're trying to provide for our significant other. Losing a spouse, a partner, or planning for our own demise and the challenge that that puts on our families. And then relatedly, making estate arrangements that will help plan our legacies moving forward. I always say that when we're planning for retirement and those golden years, we have to reflect on our goals, those wishes and dreams that we have in life, and the values that are important to us. And if you keep that in mind when we're thinking about the decisions we're making over time, that will help you to plan your roadmap effectively, to make the plans and decisions that are required in your older age, so that you can ensure that you will be, you will do, and you will have what you want at the very end of your life, and that you'll be able to pass on the legacy that you want to your family and your community the way you want to do it. I urge you to be realistic. Be realistic in terms of your health. And by health, I mean those 4 criteria: physically, emotionally, cognitively, and spiritually. So be realistic about who you are and your abilities as you continue to age, because you will continue to age. And unfortunately, we will all pass from this life into whatever the future is, whatever your faith talks about. Be aware of your finances. We talked about income and expenses, not just now, but in the future. And be realistic about your financial well-being as well. And then put the two together. Well-being overall also means your social and emotional well-being for yourself and for those around you. I do encourage you to develop a financial plan that looks at the resources that are required for you to achieve the dreams and goals that you have in your older age. And I do encourage you to seek assistance, credible people who may have the designation and the experience to help you reach the goals that you have, whether that be in financial matters or someone to help you, for example, planning a funeral. And that person or persons should be trusted by you. I wanted to address some of the financial abuse that we have seen over the past number of years. So there's about 10 items here. Generally, all of these items, all of these forms of financial abuse occur if you're doing something that you don't want to do or that you don't intend to do in your life. So example would be, in the second point, selling or moving from your home when it's not something that you want to do. That could be considered financial abuse or elder abuse. If at all, any of these instances are something that you're concerned about for yourself or someone that you care for, I do encourage you to contact your local police service and say that you have some concerns about yourself or that loved one around these issues. Again, these are general points, but they're points that are of concern for many older Canadians. And they could lead to financial abuse. For example, working for little or no money, including caring for children or grandchildren. Often this happens, and it is in fact a form of financial abuse. So again, be aware of these as opportunities to take some action that will allow you to reach the goals and objectives that you have in life. And never be afraid of reaching out to someone in your community. There are many very good fraud presentations done by local police services across the country. I do encourage you to attend one of those fraud workshops in the jurisdiction within which you live. One of the biggest concerns for many Canadians is moving as housing needs change. So as you continue to age, you may have some situations physically where you can no longer stay safely in your own home. Or financially, the cost of home ownership and taxes, utilities might become a burden. So you could consider, for example, renting out part of your home, maybe selling your home and using the equity to move into another form of accommodation that might suit your needs. You could look at reverse mortgages, where you're tapping the savings in your home over time. There are advantages and disadvantages to reverse mortgages, but I do encourage you to look at that as an option. You might want to consider living with family or moving into a retirement community, whether that be a retirement community without service or an assisted living center. Again, there are many options available to you. In your resource list that I've sent, there are some seniors guides that are developed by your province or territory in which you live. In Ontario, for example, the seniors guide that I provided in your resource list has a whole section that deals with accommodation and accommodation decisions. So if you're going to be thinking about moving as your housing needs change, there are some really simple things that you could do. One of the exercises I encourage you to do is think about the amenities, the physical things that are important to you in your own home right now. So take some time to think about those things. The second thing then would be to think about how those things will change as your physical condition changes, as your emotional or spiritual requirements change, but most importantly, as your cognitive abilities change. And then think about those changes to your accommodation requirements that will take place over time. Again, always think about 1 year from now, 3 years from now, 5 years from now, God willing, 10 years from now, so that you can plan effectively. One of the biggest challenges that we all face is illness or disability for ourselves or for someone we love. There are many resources available for in your community, including community care access centers or groups of professions in your community who may be able to help you plan for dealing with illness or disability within your family. Options like assisted living, hospital care, home care, or even hospice at end of life. Those are the things that will help you as you deal with some of these more difficult challenges. One of the first places to approach someone for help would be your family physician. In my experience with both my husband, my father, and my mother, the family physician in my community was one of the first go-tos in terms of planning care to deal with illness or disability. And there are other caregiver supports that will help you give care to ones in your family. There is a really great pamphlet. It's called Self-Care for Caregivers, and some really good websites that might help you. The Self-Care for Caregivers helps to deal with the stressful events of dealing with a loved one and trying to be Superman or Superwoman in terms of care. Losing our spouse or a partner is one of the biggest challenges that we all face. And there is really some great steps that you can do prior to those conditions. And one of the key considerations is something called a power of attorney. And a power of attorney is when you give the responsibility for making decisions on your behalf when you can no longer make those decisions. If you do not assign a power of attorney to someone and you become incapacitated either physically or mentally, the courts will choose someone to make those decisions for you. So there are two types of power of attorneys that are important. One is property and one is personal care. Property is what I call wealth. Personal care is what I call health. Now, in different jurisdictions, they might be called different things, but if you can think of it conceptually as a power of attorney, giving the responsibility for making decisions on your behalf to another person, that will help you regardless of what the formal title is in the jurisdiction within which you live. One of the things I'd like you to do is to take a sheet of paper, draw a line down the middle. On the one side, write the word health. On the other side, write the word wealth. And what I want you to try and identify are 5 things that are important to you in terms of your health and 5 things that are important to you in terms of your wealth. These are important things that would guide decisions if you were making them about either your health or your wealth. So try and identify 5 things for each. And then take that piece of paper and go have a conversation with at least 3 people about the things that are important to you in terms of your health and in terms of your wealth. Have those conversations with those 3 people. And then based on the responses of those conversations, decide which of the 3 you might want to ask to be a power of attorney. And if you do so, that will help you to prepare for making those decisions in the event that you can't make those decisions because you're incapacitated, either because of your health or because of your cognitive abilities. So power of attorney is really a great way to think about your future and achieving your goals and objectives, even if you're not able to make any decisions moving forward. Now, as you think about those things, I also want to have you think about death, not only for yourself, but for those around you. And I think you should have conversations about death because we know it's going to happen. It's better that you have the conversation now because, again, it does relate to your goals and how you want to live your golden years right up until the very end. So have a conversation with those around you about death. Do you want to die in a facility or would you rather die at home? What are the resource supports that your family can have to help you achieve that goal of dying at home that you might have? What are the community resources that might be available? Are there healthcare options for you? What do you think about in terms of funeral arrangements and some of those factors that are important? For burial, do you have a plot? Is there some cultural things or religious traditions that are part of what you want to see in terms of your end of life? Or does your spouse have some opinions about what they want that might be different than yours? Are there funeral homes that can actually ensure that you can have a ceremony that meets your goals and objectives? Have you considered doing pre-arrangement and what are the costs related to those things? So again, think about these things when you're planning your future. It's not just about money. It's about ensuring that your goals and objectives through life and even at end of life are attained. Usually what we'll do is we'll meet with a lawyer and we'll detail assets and liabilities, and we'll create those lists that can help our estate in terms of planning. The lawyer will also do a will that will talk about things when we die. Generally, the will also talk about an executor. And an executor is a person who puts in place those actions after we're no longer breathing. Prior to us breathing or no longer breathing, while we're still alive, we can assign those decision-making responsibilities to a power of attorney for health or wealth. But once we die and no longer breathe, the power of attorney ends, and the responsibility for putting our wishes into place depends on our executor. And the will helps to ensure that that will happen. If we keep a will up to date, I always recommend we do them, we review them when we do our income taxes. But if we keep a will up to date and create the will at the same time we do a power of attorney document, it will ensure that they match. And it will actually lower our costs because we can go and visit the lawyer only once for all 3 documents. It's important to note that 2 out of 3 Canadians die without a will. And why? Because we don't think we're going to die tomorrow. But guess what? It could happen. So remember, a will is a formal document that talks about our legacy, the distribution of our assets, and how our liabilities will be looked after. It should be done with a lawyer. You should not just do it on a piece of paper. And remember, if you do it with a lawyer, it does ensure that there's this congruence between the power of attorney documents and your will. It can be changed over time by rewriting the will or doing codicils, which are addendums to your will. In terms of that executor, a couple of quick things. You should always look for an executor who can manage your affairs the way you will want them. that executor should be nearby, not in another country, because that makes it difficult. They should have a knowledge of tax and investments and financial decision making. They don't necessarily need to be an auditor, or an accountant, or a lawyer. They just have to have some knowledge. They need to be good at getting things done. You want to ensure that your financial affairs are in order for your death, and they should survive you. Again, those are things that you should think about when you're trying to identify an executor. It's also really important that you have a discussion with possible executors. I always suggest to go out and interview 3 people for that job of being your executor, share with them your thoughts, and then based on their responses, you select that executor and have them integrated into your will. So you do a bit of work there as well. Now, there's a whole list of resources that you're going to receive at the end of today's workshop that you can use as you go through the rest of your journey. I wanted to highlight a couple that we've developed at the foundation that might be useful. The first is a series of little quick videos. There are 10 in total. They're called Money Laughs. They are based on the Just for Laughs comedy troupe, and they're really great little videos. I actually suggest that you see the video, watch it on your computer with your spouse and significant other, and even your adult children, and then have a discussion about some of these concepts that might be related to your financial knowledge and what's important to you. We've also developed a new website called Let's Talk Money Seniors, which is a resource that looks at the conversations that you can have with your adult children about money matters and your plans for the remaining part of your life and the legacy after you die. There's a host of topics that are important that have been identified by the seniors that we've been working with over time. And these are usually based on those difficult decisions that you as a senior might have where your children do not want to have the conversation. So again, a host of topics on the website. One of the topics is around end of life and funeral arrangements. So what we try to do in the website is give you some information about what are the component parts of that discussion that should be part of that dialogue between you and your adult children. Now, it's set up online with a lot of video and audio material that you can access and you can listen to. Again, they're set up by those topic areas. And in fact, we've engaged what we call champions from across the country. Bill Peppard is a retired teacher, principal, and superintendent from New Brunswick. And Bill was one of our seniors champions. There are 7 in total that have been engaged in the development of the resource. So Bill shares his knowledge and his experience on having conversations with difficult topics like end of life with his children. We have a clip that is in the recording that we will share with you after today's workshop that shares Bill's thoughts about dealing with end of life issues with his children. We also provide a whole host of conversation starters. So these are little tips, little scripts, if you will, that will get you having that conversation with your adult child. Or if you're an adult child trying to have a conversation with your parent, we have the same kind of conversation starters available here. If you're just a reader and you want to read, we have a new resource called Money and You Seniors Edition, which is a guide to financial literacy for seniors. Again, it's about knowledge that you can use in those life stages that you're faced with. There's 12 topics or modules that are a component part of this. You can read it online, or you can download it and print it out, determined by the module that's of interest to you. So for example, if you're looking at borrowing money in seniors' years, module 4 might be something that you'd like to look at. Or if you're interested in some of those decisions around accommodation and lifestyle, module 6 might be for you. Or if there's a term that you're not interested, or that you're interested in, but you're a little unsure about what it's about, there's a whole glossary of terms section that we provided. Again, it's all available online. It's easy to read, lots of white space, big font that will help you as you go through things. So with that, I'm going to end. I know that I'm at my time. I'm Kevin Maynard. I'm with the Canadian Foundation for Economic Education, and I'm delighted to be with you today. Thank you so much.
Thank you, Kevin, for such a fabulous presentation and a lot of insightful tips and information. So we've received a lot of great questions. Some of them are very similar, so we'll condense them and we'll send them to you. And of course, we'll try to get as to many questions as possible in the time that we have today. Just a quick reminder to submit your questions in English or French using the Q&A box located at the bottom of your screen. If your question is directed to one of the panelists in particular, so to Kevin or to Suzie, please do not hesitate to include that in your question. Note that the chat will not be monitored, so please ensure that you're using the Q&A feature. Je vous rappelle que vous pouvez poser vos questions ou partager vos commentaires en français dans la boîte de questions et réponses située au bas de votre écran. Si une question est pour l'un ou l'autre de nos invités, donc pour Kevin ou Suzie, veuillez l'indiquer également dans votre question. So before we actually dive into the questions for our panelists, we've received a couple of questions that are really related to RTO-ERO. So if you don't mind, I actually will call on our board chair, Martha Foster, and our CEO, Jim Grief, for these two. So if Jim and Martha are with us, I'm going to go with those two questions. I'm going to ask the two questions to start, and then I will let Martha and Jim take those. So first question is, how is RTO-ERO advocating for financial security for Canadian seniors? And the second question is, how is RTO-ERO helping members deal with financial planning before entering retirement? Martha?
Two excellent questions, and all of us should be concerned about these. Well, for example, what we're doing right now is one way how we assist our members, our current members. And it's funny, during this session, I've actually written a little note to Jim about exactly how we can do this for people who aren't our members yet, but are thinking about retirement. Because, I mean, we work for our members. And but we do have a number of active teachers who are now members of our organization and can see this in recording. We just need to make sure that they're aware of the fact that if they sign up for this, today it's summer, but there are others of these that go on during the teaching year, and they just need to be aware that if they sign up, they can look at this information at their own leisure at another time. So that's kind of answers both of those questions. I didn't talk that much about advocating. I don't know if Jim wants to help me on that one. I'm not sure where to go with that, but we certainly are concerned about it because that's why we're doing what we're doing today. Jim?
Yeah, I'm delighted to weigh in on this. First of all, Kevin, wow, it's just a huge amount of information and so vitally important. I've written notes for myself to follow up on, which is really good, particularly those about the difficult conversations to have that probably people shy away from. From an RTO-ERO standpoint, Martha's hit the nail on the head. We are deeply trying to bring issues related to finance and to health and wellness for our members as they age through webinars, through articles in Renaissance, which is always focused on healthy, active living for seniors, through a number of our publications, definitely through our process to acquaint people with retirement planning through our workshops. Every one of them picks up on many of the issues, not quite as deeply maybe as you did, Kevin, but certainly on the same issues of CPP, OAS, issues of having a will, power of attorney, those kinds of things. From an advocacy standpoint, I'm very proud of the work that RTO-ERO staff and board and some of our volunteers have been doing we deeply advocate in a number of spheres for our members, not the least of which is financial security. We know that Canada does not have at the present time a national senior strategy that would include some sort of security around how one can live in retirement. We're very fortunate. Many of the members that we have a defined benefit pension plan. We work hard to preserve those pension plans, but we're also aware that only 30% of Canadians, when they retire, have access to a defined benefit pension plan. So we're strongly advocating for that. And you know, not all our members do have that. So we're deeply talking with ministers of finance in every province, and certainly in our own home province here of Ontario, to make sure that those kinds of issues are at the forefront. And we do that annually within our province. We do it every time there's an election, regardless of whether it's a territory or a province or a federal election. We're out there all the time making these issues count for our members.
Thank you. Thank you very much, Martha and Jim. So now let's look at the questions that have come for Kevin and Suzie. I'm actually going to send the first one, I think, to Suzie. So this is a question that we often hear, especially from folks who are getting ready for retirement. So Suzie and maybe Kevin, what factors should I consider when trying to decide when to take CPP? Am I better to take it early or to defer the start date?
Well, part of it's personal, you know, feeling. For myself, I always think take it the soonest you can, because you don't know what will happen down the road. And some people delay it and unfortunately pass away, and they haven't received any of that, you know, money that they've worked so hard for. But also, like, if you have a financial planner, put a plan together for you, because it really depends what other sources of income you will have and how high your income will be while you're collecting it. So in some cases, it does make sense to defer somewhat. But like, for example, when I do a plan for my clients, I can show them this is what the numbers look like at 60, at 65, at 70, just to give them all the information, because the answer for one person could be very different than the answer for the next person.
Right, right. Perfect. Okay, thank you so much, Suzie. I'm actually going to send the next question to Kevin. Kevin, you've talked about this in your presentation, and we've had several questions about this next topic. Can you tell us more about the CPP survivor benefits? Is it only for a spouse, and how is the amount calculated?
So again, I may defer a little bit of the question to Suzie, but I will just tell you based on my own personal experience. So generally, it is based on the amount of contribution from the contributor over time. So depending on your relationship with that contributor, so spouse or same-sex partner, there are some legislative pieces around that. I'll let Suzie comment on that after I'm done, but it is based on the amount of contribution of that individual over their working career here in Canada. I was just surprised, again, that's why I wanted to raise it. I was surprised that I was eligible for it. Now I was married to my husband. But I was surprised that even at his young age, I was still eligible for it. So it is based on the amount of contribution. In terms of the legal relationship of the spouse or spousal equivalent, Suzie, any comment?
Yeah, you're right. The legal equivalent can be, you know, same sex or different sex, you know, partners, absolutely. And as far as calculating those amounts, like I know, Kevin, you mentioned, you know, the Service Canada website, and they have all kinds of calculators on there, and you can click what your situation is, and it's very accurate. Or also calling Service Canada. I mean, you'd be on hold for a long time, but they're very helpful as well, and can give you like your specific numbers.
Okay, That's great. Thank you so much. Thank you, both of you. Maybe I'll send the next one to Kevin to start. It came in French, so let me read it in French first and I'll read it in English. So the question was, avez-vous des conseils pour parler à notre famille ou à nos proches de nos plans financiers et de nos objectifs de vie? So do you have any tips for speaking to family members about our financial plan and life goals?
Absolutely. So the website that I mentioned, it's called Let's Talk Money Seniors, is available in English and French. There's a host of conversation starters that are available off of that website in English and French. You can use that as a toolkit and begin to have those conversations immediately around the topic areas that are identified on that site.
Great. Thank you. I will send the next one maybe to Suzie to start. Suzie, what are the financial implications of working in retirement that we should be aware of?
Yeah, there's so many pieces to this question. Like, what will your overall income be in retirement? And do you have a spouse, and what is their income? What are your expenses? Because that again will dictate when, you know, you take CPP, if you take it early or you delay. So again, it's like, I'm always going to come back to the financial planning piece. It's just a financial planner, can't help it. But yeah, it's really the answer for one person so different from another. And just, yeah, if you, like Kevin mentioned, if you don't need the money, say, then it might be better to just volunteer, right? But if you do need the money, then yeah, then there's that decision on when to take CPP and how long are you planning to work? What is your health? You know, how long do you figure you can work? There's a lot of different pieces to consider.
I think the other piece that I would add there is just be aware of your tax situation. So be aware of what tax bracket you're at for the current year. If you have any room available for contributions that have not, that you still have contribution room in an RRSP, depending on your age. As well, the other big pot that people forget about is tax-free savings accounts and what you can put into a tax-free savings account, not necessarily to reduce your income for any taxable year, because it won't really have that effect, but the interest generated from the return does impact your income and your income bracket. So those are the two things. Be aware of how much contribution you have in an RRSP, and whether you might have any TFSA room. Or the other one, it would be spousal RRSPs that you might be able to do in terms of income splitting. Any comment there, Suzie?
Yeah, you're absolutely right. Another, I hadn't even mentioned that whole the investment part. You know, what will your income be and all that, but how much do you have in RRSP? How much do you have in TFSA? What's your TFSA room? So yeah, you need to look at all of those important areas.
Well, it's amazing. You've both given me the perfect segue to the next question. In a way, you've kind of answered it a little bit partially, and it's, you know, there's so much to consider, but actually several people have asked if you can explain the difference between RRSP, RDSP, TFSA, and RIF. Like, can you comment on when you would use each of these?
So I'm going to start, and I'm going to say a TFSA can be done anytime that you're 18 years of age and up. A tax-free savings account is a great way to save. All it does is, the only real difference between it and other types of bank accounts is that the interest earned in a TFSA is not taxable as income. It's the only kind of an account that you can have where the interest that is earned, or the growth in your capital, is not taxed. And there are a lot of rules around that. The only other one that I'm going to comment first is a RIF, Registered Retirement Income Fund. Generally, if you have a Registered Retirement Savings Plan, or RRSP, in December, the year that you turn 71, all of your RRSP has to be transferred into another type of account called a RIF, and then you are mandated to withdraw from that RIF based on an amount set by the federal government every year. So it for us as a mindset, it kind of switches our head around, because up until that time, we're used to saving money for our retirement. At 71, you have to start taking that money out, and you have to. If you don't, there are penalties that apply. I'll stop with that and turn it over to Suzie.
Oh, you stole all my material, Kevin. Yeah, you're exactly right. Like the tax-free savings account, you can either invest in, just for easy numbers, say if $100,000 grows to 110,000, you would normally pay tax on that 10,000 when it's outside of an RRSP. However, with the tax-free savings account, your money can double. It doesn't matter how high it goes, it's completely tax-free. When you pass away, it's tax-free. If you withdraw, it's tax-free. There's never a taxable situation. An RRSP, as Kevin mentioned, that's something that you're depositing, during your employment years. And ideally you want to be contributing to an RRSP when you're in a high tax bracket and taking it out when you're in a lower tax bracket. Otherwise, you're just kind of paying that tax money back. And then as Kevin mentioned, the RIF, the Registered Retirement Income Fund, that's still your RRSP really, but it just turns it into an income stream. And the government says that by December 31st of age 71, you must turn it into that RIF, but you can delay your first payment to 72 if that makes, you can delay it for the year if that makes the most sense for you. But yeah, it's really just, it's still your RRSP money, but it turns it into, instead of an occasional, I need $1,000, I need 2,000, I need 5, you get 2,000 a month or 5,000 a month or whatever your number is, just going directly into your bank account. And then our DSP was the other one. That's a registered disability savings plan. And so somebody who does have the disability tax credit, I couldn't think of it for a minute there, they qualify, and there are different, government grants that can be received. And then this money doesn't affect that person's ability to receive the government funding that they receive. So I think that covered all the different accounts.
Yeah. Oh,
Well,
go ahead,
you got
Kevin.
something?
So the only other piece that I'll mention is that you may want to consider a beneficiary noted in an RRSP because there are tax implications when you die. If it's a spouse, that is different than someone else. Maybe Suzie, you could comment on the beneficiary related to a registered plan.
Yeah, a really important point. Yeah, so with RRSPs or RIF, once you turned it into the RIF, and again, I mentioned the age 71, you can turn it into a RIF at any time, but just you have to by 71. When you name a spouse as beneficiary of the RRSP or RIF, it transfers tax-free to that person. However, once they start taking it out, it's taxable. But when the second of the spouses die, if it goes to a child or a friend or anybody other than a spouse, it's completely taxable as if the deceased person spent all that money, the day they died. So it's completely taxable. So some people, if it's over 200,000, they end up paying 53% tax on that money and don't know that. And then the TFSA beneficiary, typically with spouses, they name each other. And even if you both have the maximum in the tax-free savings account, because you can put in 6,000 per year, and the maximum right now that anyone can have contributed is 81,500. So say two spouses both have 81,500 and one passes away, the other one can move all that into their tax-free savings account, even though they're at their maximum already. However, if a child or a friend or anybody else is the tax-free savings account beneficiary, they just basically receive the money and they can put it in a tax-free savings only if they have the contribution room, whereas spouses, you don't have to have the room. You can still put it in tax-free.
Okay, oh, that's very good information to have. I'm just cognizant of the time. We are down to our last few minutes of our webinar, but that's okay. We have room for a couple more questions. So I'm going to send we've actually had several questions about estate planning. So how can we reduce probate costs and taxes? Can you comment on transferring, for example, your home to your children? Are there tips for selecting a financial power of attorney? Things like that.
I'm going to just comment briefly about the tips for selecting a financial power of attorney, or what I call wealth. Again, I would make sure you share your thoughts, your goals and objectives that are important to you with whoever that person might be, to ensure that they're congruent with what your plans are. In terms of the tax implications, I'll throw that over to Suzie.
Mhm. Yeah, and myself, I'm not an accountant, so I always, anything tax related, I can offer, general advice. However, I always recommend that anyone does talk to an accountant that they trust, for that advice. However, I usually do, a lot of people will recommend to me, they'll say, oh, I want to put my adult child on the property of my house and hold it jointly with them. Or I want to make my bank account joint with my daughter or my son or whatnot. And I usually do, and that's another, they might even want to, talk with a lawyer as well. I usually recommend against doing anything like that, because as soon as you make something of yours joint with someone else, that's becomes an asset of theirs, even though they know the money's not going to be theirs until you pass away. But if they say they declared bankruptcy, that's an asset. If they're in a car accident and they get sued, that's an asset. Somebody slips and falls on ice in front of their home and gets sued, that's an asset. So even though it's like the trust is there and you trust your adult children, I usually advise against doing anything like that. But again, if you're seriously thinking something like that, I would definitely talk to a lawyer and an accountant as well.
The other issue is divorce in a situation
Yeah.
like that, because it becomes an asset that must be divided up according to the courts. So you need to be very, very wary. The other thing that I've heard is CRA is not looking favorably to things like joint accounts. So they may look at it as a tax evasion sort of technique. And so you have to be very aware of that implication. That's why talking to a tax accountant, particularly for high value estates, is really important.
Yeah, that's an important point, Kevin. I hadn't mentioned that one, but yeah, when you hold something jointly with your adult child and then they're going through a divorce, that's an asset as well. So yeah, that's a great point as well.
Okay, and trying to fit two more questions before we're done. I need to tell you both that we've had many comments on how incredible your presentation was, how clear it was, and how beneficial it is for people's planning. So one question, how can we adjust our retirement financial plan given the recent inflation increases? Can you adjust that?
Yeah, I'll start on this one. Well, when I do a financial plan, in the past, like our software used the number 2.2% because that was the historical average percent. However, now like the inflation was 8.1 and now 7.6. And so I've increased to do my projection over the course of someone's lifetime for 3%, is because the Bank of Canada, even though it's 7.6 right now, the Bank of Canada has stated that their target for 2023 is 3%, and they expect by the year 2024 it'll be back down to 2%. So I still feel bumping it up to 3 is important, but for somebody in your own, like I think budgeting is important. If anyone's finding, the cost of groceries and gas and all of that, just budgeting, really sticking to a budget. And I'll just give a really quick example. One of my clients had thought at the end of the month, I did the plan showing they had an extra $600 a month. And they're like, we don't. We looked through their bank statement and he was spending $600 a month at Starbucks, and hadn't realized it, going for coffee in the morning, maybe getting lunch. And so really take a look at your spending and your budget, and, just try to fine tune things and look at, maybe subscriptions that you're paying for online or magazines, and just really try to, stay within a budget. It's important while the inflation is so high.
Yeah, go ahead, Kevin.
The other thing that I would say is that's why that 1 year, 3 year, 5 year window in terms of expenses is important, and be realistic. One of the surprises I had when I was doing my mother's care was the cost of her living in a full service assisted living facility. The cost and cost of the care decreased, the quality of care increased versus when she lived in just a retirement facility, because all of things like personal hygiene costs were included in the cost of that assisted living facility. So even though that wasn't what I had heard or thought was the case, that was what we experienced. My mother's living expenses went down, the quality of her care went up in an assisted living facility. So it's just very interesting. You need to be aware and do the research so that you can do that projection out. be as good at forecasting with your own crystal ball as possible by thinking ahead, thinking about your own physical, cognitive, emotional, and spiritual progression as you age, and be realistic.
That's great. Thank you, Kevin and Suzie. I will call on Jim Grieve for the final remarks. And I just want to remind everyone that we will summarize the questions that we didn't get to today and include them in the recording. So no worries. Jim?
Muriel, thank you. I think the over 500 people who actually joined us now understand why the Canadian Foundation for Economic Education is one of our latest and greatest partners, official partners with RTO ERO. Kevin and Suzie did a superb job. I know there are questions that we didn't get to. We'll get to those. But I'm also aware that there have been many, many kudos delivered in your direction for the great advice you've given. From my standpoint, and I've been chit-chatting with some of the other members of staff on text, this is a presentation that our own staff at RTO ERO, who are pretty young for the most part, need to hear. You need to hear this many times over through your career. And this was just a superb opportunity. And I'm glad that those who registered but couldn't make it will get an opportunity, because we, in the next 2 weeks, will do a little bit of editing to make sure that the recording features bilingual text, which is great. And we'll get that out in the next couple of weeks, so it's available on our website. Again, Kevin and Suzie, just a superb job today. We're really looking forward to the next event, Kevin, that you're going to be participating at with us in September. Interestingly enough, you know, we talk about health and we talk about wellness and we talk about mental health and emotional health. Financial literacy is superbly important. And here we go. The next of these webinars in the next series is about home and auto insurance. My gosh, you know, we're dealing financial literacy and then home and auto insurance with Yvonne Brady coming up on the 15th of September. Those who are listening still need to know it's coming, and you need to tune in, because this is a really an additional important area for our work together and for your safety and comfort as well. So thanks again for everyone joining us today. A special thanks to Kevin and to Suzie for great work. As always, Muriel, superb mediation of this event, and we'll look forward to the next one.